Good morning, everyone, and welcome to the European crossover webinar. And have a little bit of a interesting session here. We have the Aussie dollar. You can see here we've come into right a little bit of a support level we have here on the 2-hour. Trying to figure out where the heck I'm dragging this support from, but they found it right there. Guess I must have parsed things out just tight, but I found it right there, and there it is, and it has some, and it's tagging that support. Looks like that support's right there at 69.18, and the low is, well, 69.19, which is interesting because we've also seen the Euro Aussie, and we'll get to that, as we like to generally do a quick overview before we go into news and then analysis. You can see here on the Euro Aussie, we've gone and penetrated at 61.90. I mean, the 62 even. Now, I've posted this chart quite a few times, but this is on the daily. And we talked about this getting to 62 even, and then 62, 23 is 61%. Matter of fact, I think we had the bias chart resistance at 62.35 because I believe we've got a little level there. Yeah, 62.35. So we're holding here. Problem is also a tug and pull affair. Now, we are trying to find a little bit of support here in the Aussie dollar. And we have tripped stops. But another thing is the euro's got some problems. We actually have the bunds. Saw the headline here, the highest since I think, go back into this. Germany's 10-year government bund yield bund falls to the lowest since October of 2016. Now, you know, it's pretty tough sometimes for the euro to advance if the bund's making new lows. Okay, so let's go and take a look at here, another area here. Once again, this is really to give us kind of like a little bit of a tone for the day ahead. So you can see here, 10-year government bond yield falls to the lowest since 2016. Italy's Germany 10-year spread stretches to 285 basis points, the widest since February the 11th. Italy's 2-year government bond yield rises to the highest since December. You know, we've got these problems with Italy and their debt, and that makes it tough, you know, for the euro to gain. Now you can see here on the bund, we're trying to, you know, at least the price is moving back up higher again. And obviously the woes with Italy got some decent resistance coming in around the 67.53-ish area here. But those Italian woes are really weighing on this market. Now, I was up in the Asian session, I was doing a little bit of trading, and some of the guys were there. I think Nitish was there, Leon and Rick. And, you know, we were talking about the, you know, the Euro Aussie. And we were jumping back and forth, but one of the things I mentioned to the guys, because someone think we may start to slide back, but I was using the Aussie dollar itself as a gauge, and the key was to defend that 69.29. We'd already fallen through it, and we closed below it on this 1/2 hour bar at the time. And I said, look, as long as the momentum's down, it's going to allow this Euro Aussie, because I was using the Aussie dollar as a gauge to push higher. And I don't think they're going to be satisfied until they take out these, I don't want to say stops, but the 62 even level. And now we've gone and taken that out, and we'll see how much further they can stretch, where we can make it up. To me, this seemed like a little bit of a magnet, the 62.23, the 61%, because once you get past the 62, problems, like I said, Euro's got its own problems, but it's coming off these lows. So we saw some growth with Germany. And I have a level up here at 62.35. Right, you see that right there. So we'll see if we can push here and hang on to this, but we'll see what happens on that. And Aussie yen, challenging, but not yet taking out its lows here. So we did see some growth here with Germany. So that's given the euro a little bit of a bounce back here. Of course, look at Italian numbers. Those are always just lousy. And we do have employment at the top of the hour here. Coming into the States, we're going to have retail sales. That should be a mover here. And we do have a Canadian CPI. Industrial production capacity utilization here in the US. And business inventories. But retail sales will be a big driver here. And of course, we have employment numbers coming out at the top of the hour. So, and the dollar index is kind of easing back a bit here, kind of weakening a bit. It's been relatively quiet here in some of these other pairs, like the Canadian dollar. And it looked like it's trying to dip, but here we are pushing back up again. Dollar yen is kind of eased back, but still relatively quiet overnight. And S&P SPOOs are at 28.32. As I mentioned about the Aussie dollar, we are finding some support in here. So let's go on and move into the news. Kind of give us a tone for the day. Like I said, without markets moving that much, our numbers may not change too much. So I guess the tone is going to make a difference. Germany's economy returned to growth in the first quarter of 2019 after 6 months of stagnation, according to a first estimate that highlighted the impact of higher household spending and strong construction activity. GDP was up 0.4 quarter on quarter, in line with analyst expectations. Economy Minister Altmaier called the figures a first ray of hope, but warned that this economy was still at risk from the international trade tensions, among them the U.S.-China trade row, and an imminent decision by President Trump will wait to impose tariffs on European cars for the U.S. PMA has told opposition leader Jeremy Corbyn she will be taking the EU withdrawal bill back to the parliament In the week beginning June 3rd, the plan is that the lawmakers in both the ruling Conservative and Corbyn's Labour Party will by then be so cowed by their dismal showing in the European Parliament election that enough of them will sign up to the bill just to get Brexit over and done with. Already one Conservative lawmaker this morning has said Eurosceptics in his party will vote against it, and it's far from clear that enough Labour parliamentarians can be persuaded to back something that which still looks like a Tory Brexit. Failure to pass the bill would make it hard to get it through Parliament before the summer recess, effectively signaling curtains for May's premiership. Let's see. On to markets, a little squabble that raised tariffs on more than $250 billion of goods traded between the U.S. and China over the past week has left markets on edge and traded off nods and winks from the White House and Beijing. Perhaps mindful of the stock market plunge and on the re-escalation of the trade war since Friday, President Trump has toned down his rhetoric and again talked to the prospect of a deal by the time he meets Chinese President Xi Jinping late next month and denied the talks had collapsed. But substance of the breakdown remains, and another 6 weeks of brinkmanship lies ahead. Despite the mood music, Reuters reported that Trump is expected to sign an order paving the way for U.S. telecom to ban on Hawaii. The warm awards, however, helped Wall Street stocks again regain by about a third of Monday night's losses. And the S&P ended up 0.8 of a future, are up another small notch the first thing today. The VIX gauge retreated below 20% in the 10-year yield, regained a foothold back above 2.4%, despite surprisingly weak Chinese industrial and retail numbers for January through April, with retail sales growth its lowest in 16 years. Shanghai stocks rallied by more than 2% to their highest in over a week on the White House tone and hopes lousy economic numbers would usher in another round of policy stimulus. The index remains down more than 4% for the month so far. Elsewhere in Asia, Hang Seng was up almost 1%. In Europe, the sterling was above 129 after falling to its lowest in a fortnight. Expectations are rising that UK May could put together her Brexit withdrawal agreement before Parliament early next month as talks with the opposition position, a Labour Party flounder. But she needs, with her backbenchers from the 1922 committee later today, and amid growing pressure on her to step down. The UK wage growth data came in below forecast yesterday, despite another drop in the jobless rate. Italian sovereign debt yields climbed and euro weakened on Tuesday after Italy's Deputy Prime Minister Matteo Salvini said the government was prepared to breach European Union deficit and debt rules to get growth back on track. And I have a little story on that real quick, but it's just a lot of problems dealing with that, which isn't good, for the euro. It really opens it to susceptible. So we'll see whether or not that has some kind of an impact. Dollar firms in Aussie on the defensive at focus turns to U.S. European data. Dollar held while the Aussie dollar hovered near a mere 4-month low. FX reaction to worse than expected growth in industrial output and retail sales in April, that need for Beijing to roll out more stimulus. The dollar was supported as trade issues remained foremost on investors' minds after President Trump on Tuesday insisted trade talks had not collapsed. Investors will continue to monitor barometer of currency pairs. Nick Twildell said Aussie and Chinese yuan remain under pressure into recent lows. Market focuses on the Eurozone and German GDP and U.S. retail sales. GDP in 19 countries sharing the Euro rose 0.4 in the first 3 months of 2019. Given China's weak data, the market won't be able to avoid a reaction if the U.S. figures are weak, as well, said Ayako Serra. The single currency ended the previous session a week after Italy's deputy prime minister said the country was ready to break the European Union budget rules on debt levels if necessary to boost employment. And that really got a row going in Italy. We'll get to that. The Aussies also have been seen as a proxy for Chinese growth of Australian export-reliant economy and China being the country's main destination for its commodities. If this trade situation continues to worsen, Aussie yen is probably a cross that we want to take a good look at, said Wakabayashi. It will be hard to go long Aussie product positions with the oil situation, what it is. In the commodity markets, U.S. crude and Brent futures were both down after the American petroleum industry reported bigger than expected. And let's see, let's take this. And EU split over deteriorating Italian finances. Essentially, this just once again, we're just going to just skim over this. Is Here we go, yet outspoken Deputy Prime Minister Matteo Salvini, whose right-wing lead parties in government with the populist five-star. He's the one that said, hey, well, they'll just raise the debt levels, which really ticked off, and they're in their own situation right now. We'll just touch into that. De Maio raps Salvini over irresponsible debt remarks. And we already talked about him saying, shooting off about raising public debt, and coalition should focus on spending and cracking down on tax evasion. Boy, tax evasion, that's something you're always going to see with Italy. Italy's 10-year bond yield hit a 10-month high of 275.5 after Salvini's comments, which, while the closely watched spread between Italian and German yields hit its widest level in 3 months. The thing is, this isn't going to go away, and it's going to work like a ball and chain on the euro, and why the euro has been weaker. It's been a pretty good push of yesterday on the weak side. It's trying to push up a little bit higher here, but we'll see what, it's going to be tough to mount with until they can get something clear on Italy, and that doesn't seem to come anytime soon. Excuse me. So let's go on and take a look at where we stand here with the analysis. As I said, some of these markets are relatively quiet. Look at the dollar CAD. I mean, obviously nothing's going to move on that. That hasn't even moved basically. I'm surprised still to see it up at these levels, but it's still holding up rather well. The cable though, we have moved even lower. We did have a support here at 16, and that kind of held for just a bare moment. Looks like they rallied them back about a big whopping 10 pips maybe, and then we started to slide. Now we're still hanging around this 29.16. We're actually there at the moment, 29.15 and 0.6, but we will get to that. Now looking at the euro, like I said, is going to be under pressure with these Italian comments. Dollar rallied back up a little bit here, but let's see where we stand here now with the euro. Well, this 1262, there's our 1262 on the daily. It's held up like a rock here in the euro, right there. That's going to remain the resistance, because you can make the case, okay, now it's 1230. Look, if you're trying to scalp or something, you can make the case that there is some resistance. You can see right there at 1230, and you can see it right here. But the real resistance is 1262. If this market gets on, let's say, I'll give you an example. If we see weaker U.S. retail sales, you can see this thing take off, and it may just blow through 1230. And if we get up to 1262, we might take out a few stops, but then we might slide back. So 1262 is still going to remain resistance, okay? And then as far as support, we kept it pretty tight. Remember here at 1214, we've been as low as right at 12. Especially with this Italian debt situation, we have to be a little bit more realistic now, because we're really pushing lower. And with the possibility they could move lower, we did get some growth out of Germany, so that's certainly supportive. On the downside, we're going to have to come back down here to 1175. Look, there's some support here. You can look at maybe, depending on if we hit some stops, we come down here, we touch some feelers, and maybe we pop back up. But the real support's going to come in right there, especially with the euro under pressure. And if you look at it here on the 2-hour exponential moving average, we've already crossed over into a sell mode now. So support now is going to be right there, 1175. Look at this Aussie trying to gain some ground right in here. Look at that. Not much, but I'm saying he's trying to hold this little area here. And let's go move into cable. Well, for right now, we're just stuck right there, 28.93 for support. Thinking the dollar might be just a bit under pressure. We'll have to see will they try and dance beyond that. We'll just call it right there. $28.78 if we push lower. But this is not a bad area right in here. If it's going to make a stand. Although 29.16, like I said, that was our stretch at the time on the way down and carried over from the prior day. And they did make it down there and didn't see much of a bounce here, but this is an area here just below that. But we're holding right now. I mean, we're 29.13, 29.15 essentially. But where's your risk level is going to be that 28.78. But they're trying to hold in this area here. Another reason I want to make is 28.78. Let's say we do get good retail sales. We may still in the US. They may be able to push the stops a little bit lower, dip down here, then make a stand here, and then try and pop back up. On the upside, it's got to be the pivot 29.80. You can make the case there's going to be some here at 29.56, but the real resistance will be 29.80. There'll be some here. Let's take a look at a 2-hour. Actually, a pretty good little solid base right here at this 28.89. So we'll actually move it based on this 2-hour to 28.89. There's that 29.80. We actually moves up even a little bit higher. Call it 29.83. If we see a good little bounce, there'll be some right in here. 29, as we talked about, 29.56, but the real resistance is 29.80. So let's say we saw some kind of bounce in here, but you know, everything's right now, this is so news driven. And certainly things have been on the woeful side and has allowed this to move lower here. And I don't see anything really changing. It's just a matter where they kind of place a hold on this. So it's still going to be 20, we'll go 29.83. Moving here for the Aussie dollar, well, we see this right here. This is where we're going to go with that level there. See what happens. 69.17. And we know about the 69 cents. They may even push even lower. That's a temporary little area here. you know what, if we do get bad retail sales, they're going to slice through that and they'll go through 69 cents, trigger the stops and see if they can defend this. So we'll go on and keep that 69 cents. Like I said, some things aren't going to change very much, and we've got 69 cents. Yeah, we'll stay with that. The difference is on the upside. Well, that's the real resistance right there. So it's a long ways off, but if we were to recover, then that would be the line of demarcation. 69.96. Well, there you go, 97. We'll one little pip lower. On to the Kiwi. This thing's holding up very well. Look at that. We haven't even taken out 65.45 yet. We're going to go and keep our 65.17 here on the Kiwi. And resistance. Will remain here at the 66.16, so no change there. Now, one that we know it's not going to change at all is going to be this dollar CAD. Everything, I mean, look at this dollar CAD. It's just absolutely stuck in the mud. I mean, it's just not going anywhere. And myself, I would have thought we'd have been working lower. We're not moving higher, but look at this. We are just absolutely, look at this. This is unbelievable here. If you think about this. And let's take a look here. So if you look at this, and I was just looking at some, so apologies, 34.87, 34.56. So basically a 30 pip trading range for a day and a half. Unbelievable. So no changes here in the dollar CAD. None. 34.29 here, 35.04. We do have Canadian CPI data out, so. And on to the dollar peso. This is another interesting one here. As I said, we're just slow. You can see we broke this downtrend line. We're on a buy signal here, and we're just stuck in the mud, despite what would be perceived risk aversion. Although we did see a little bit of bounce back here in the S&Ps. You can see here the peso here, no changes. Also, it's going to be 1923. Support might be a little bit lower. Might have to move that down to about a little bit of touches here. 1909.3. 1909.3. There. Let's move into the dollar yen, and same thing here with the dollar yen. We're trading relatively quiet. Now, here's the thing: you have to do look at things in a perspective. Um, we've been talking about this pivot for some time, and remember when we got all the way up in here and we started to slide back, and everybody, not everybody, but quite a few people thought we were going to 113, 115, 116. I thought it was a bunch of hooey. But anyway, we slid back, and I myself had been short, and I ended up jumping out because it looked like, okay, it's going to push higher. I can't deny the technicals, but we turned around, we went back, and it caught a little bit on the downside. Not like what I would have, but anyway. That being said, this 927 has been a key. Now we got down. Remember, our bias pivot was 907. So this market, we talked about that a couple of days ago, or maybe yesterday. If you look back in retrospect, it's like, wow, it didn't want to go down even when the S&Ps were making new lows. So we're just hanging around here. Retail sales will probably go a long way in triggering what we're going to do on this, because if we get lower retail sales, then maybe we're going to continue to see this impact with this whole China row and all this other stuff, open the door for them to push lower, but we shall see. Okay. And my thinking on this would be, look, if we do get wick, I think we're still going to move lower over on the S&P. But what I'm saying is it would kick it off now, because then they think, okay, well, the Trump and Xi Jinping meeting in June for the G20, well, that's still going to be a ways away. Do you think the market's going to sit around here waiting for that? If retail sales come in weaker, no. So we'd be pushing that lower. I think we'll push lower anyway, but I mean, I think they would kick off that immediately, and then we could see the dollar yen move lower. But we've come into, if you want to call it, actually, for lack of a better phrase, a value area, because of the 927 pivot. We took it out, but we really couldn't get it. I mean, I was surprised we couldn't even take out the 109 area. So we'd have to really break lower. We'd have to have some bad retail sales, and the bad retail sales would open the door then for us to challenge and probably get down before we saw some buying a little bit, which would be about 855. Okay, so almost about 100 pips, about 90 pips away if we saw that. But that's what it'll take, okay, for us to kick a new leg lower, because we came into a value area here. So now looking here on the dollar yen, well, when we look on here on the 2-hour, right there. I don't know if it would make it back up to 992. We'd have to have a heck of a bounce. Let's just lower the size. And I had that already before. 989, which would be above the 23%. Let's see if we can get to there. That would be the resistance here. So 989. Support we got 933, but once again we come back to the pivot. We'll just list it as the pivot for support because it is on a little bit playing on the weaker side. Let's go into the cash dollar index. We still have this 968, which I think would be a tall order for it to get above. We have a downtrend line here. If we get some good knockout numbers, not knockout numbers, some good retail sales, we may be able to pop up. I'm not sure we'll make it all the way back, but that'll be the line in the sand, 968 right there. For some reason it comes at 969, so we'll give it the 969. I think I don't think we'd even make it all the way back up. Well, we'll see, but that would be pretty tough to get a foothold above that. Support, would have to be 97.24 for now. Short term, well, actually, we could work a little bit lower here, right there, 97.21. With that, let's go move into the cross rates. So we were thinking that we're going to break lower here. We haven't yet. Obviously, if we get the the retail sales come in much weaker. We can see that. So we're going to go and still keep the 71.45. Right now, they're trying to hold this area right here at 71.84. But once again, like I said, if we get weaker retail sales, that would open the door and they'll push them, and that's where they'll go to 71.45. So you have to know where they want to chase after if that's the case. And as far as resistance, we'll have to just lower that a bit here. 72.50, 72.50. Tightening that up a bit. And onto the euro yen. Well, we still have the opportunity to move lower here, and we know that the troubles that the euro is encountering now. We did get some better news out of Germany, but this Italian situation is just going to weigh on it. Let's take a look here on the daily. There's a level right there, 22.27. Let's call it 22, yeah, 22.26. Let's go 22.26. Thinking that they'll break them. And resistance is going to be 23.26, 23.27. Moving on to the euro odd, we've already touched this several times. We took out the 62. We're kind of weakening a bit. 62, 23, the 61% is up here. The Aussie's trying to hold this area here. We'll see what we can go on and do. We still have the chance. We did blip above it. We'll see whether or not we can do something with this. But still, as long as we close above here, which would be 61.85, we can still maybe weaken a bit here. The door could still be open. The question mark is if we close just under 61.85, then it opens the door for us to weaken just a bit. And the Aussie's trying to hold its own here, but the door's still open up for higher. So if we get weaker retail sales and they pressure the Aussie, we still have the opportunity to get to potentially to 62.35. That's kind of basically, where we could stretch, kind of a bit of I wouldn't say a stretch target, but almost. I mean, because we already hit 62, 23 to 61%. So if we get beyond that, here's where you look for the market to maybe finally ease off a bit. So it's still open to move higher, and we're still in a buy mode here. So we have to really pull back to change things around. On the short haul, support at this point is going to be 61.41 on a short-term basis. We actually defended that area yesterday. We got just a little bit below it. We'll actually open it just a bit lower in case we do get that. If we do get that pullback, if we do, support would all be all the way down here to 61.08. That's what we're looking for. There might be a pause here, a bounce back at 61.20. Let's put it. I usually don't go on the high tip, but if we come back and we start to sell off, we trigger this down. Actually, we'd probably take that out and we'd stop right there, 61.15, 61.15. If we saw some kind of reversal, that's where we go to. But we're still a ways off from that. Going into the Euro New Zealand, Euro Kiwi. This thing is stuck in the mud. No changes there whatsoever on Euro Kiwi. Moving on to ASEAN. It's not that we can't push lower. I'm saying I think we can push lower and get down here, but initially we'll be looking for this 75.31. And we'll probably overshoot it a little bit. 75.66 is a 50% here. Let's go with the 75.31 for support. But we can probably break somewhat lower on this if things were to really start to spin out. Resistance will be right there, 76.42. Potentially we come down here to 40.80. Yeah, let's go right there. It's actually even lower than that, 40.55. If the cable breaks lower, not the cable, but I mean sterling continues to lose, then that's what we would go to is 40.55. And if equities break lower, you got to prepare to how far this yen will strengthen or how much this yen will strengthen. Resistance for now will be 42.10. Support right now is going to be 86.14 on the sterling odd. And for now, it'll be 86.81. We'll call it 86.82. We know that 87.12 is big on a daily, but things have tightened up and we'd already taken a dip lower. So there's the bias chart. Remember, the euro has its own difficult situation with Italian finances. When we go back into the main screen, we're probably not going to get any big moves either way in a lot of these pairs until we get past U.S. retail sales, because that's really going to set the the tone of what happens in. Because if we get weaker U.S. retail sales, that might just really knock this S&P down and really get things cooking with the yen, the Aussie. If we do hold up, then maybe we can make these turns on that. So we may be in check. And same thing here with the dollar index. Good numbers will probably try and make a run up here, but I think it'd be pretty tough to get beyond 69 or get a foothold above that. I'll get the bias chart posted, and thanks for joining us here on the European crossover webinar.